Let's go into the effect of these adjusting entries. Going into the effect, let's start with the first one, which is converting an asset to expenses. So what we are doing, this asset is converted into expenses. What is the effect on the income statement, on the revenue, and on the expenses? As we convert asset into expense, we have increased the expenses. So the expenses are increased. Revenue did not change. But since the revenue minus expenses is equal to the net income, as you increase the expenses, logically the net income will have to decrease. So you have expenses that are incurred, so it will reduce your net income. On the other side, on the balance sheet as another financial statement, what we did is we converted the asset into expense. This asset that was converted to expenses, we reduced that asset. So we entered a credit entry on that asset. So accordingly, the asset will decrease. And since on the liability side, it will have no effect, and knowing that assets, it should always be equal to liability plus owner's equity, so a simple decrease with the assets, with no change in the liability, it will have to decrease the owner's equity. In the second one, as we are converting liabilities to revenue, what we are doing is this liability is turned into a revenue. So we have earned some revenue. So the revenue will increase on our income statement. Again, we did not touch the expenses. As the revenue increased, so logically here the net income will have to increase. We are generating revenue. And converting liabilities into revenue, we are reducing the liabilities. So the liabilities will decrease. Assets will not change. And again, since the assets did not change and the equation of assets equal liability plus owner's equity with no change in the assets, so a decrease in liability will obviously have an increase in equity to maintain liabilities plus owner's equity equal to assets. As for the third type, where we are accruing unpaid expenses. So these are unpaid expenses. So these are expenses that we have to take into consideration. These are expenses that we have to record. These expenses that we recorded will increase our expense item on the income statement. So that increase in the expenses with revenue being the same, obviously it will decrease my net income at the end of the day. And these accruing of unpaid expenses, these unpaid expenses, I have to pay them. So these are liability on me. That's why the liability account on the balance sheet will have to increase. And again, with the equation assets equal liabilities plus owner's equity, with no change in the assets, a simple increase in liabilities will be at the expense of decreasing the owner's equity in the form. As for the fourth item, where we are accruing uncollected revenue. This revenue, as we said, it is revenue for us, but we did not collect it yet. Since this revenue is for us, it's an increase in the revenue on the income statement. Of course, it will increase our net income. And since this revenue has increased and I did not get it yet, so it is money owed to me. So it is my money. It is my asset. So that's why the assets on the balance sheet will increase. And since the liability are not affected, this increase in assets will also increase the owner's equity.